Well, Menon Solomon writes in, he's 39 years old and he has a very high risk appetite. Now, he wants to build a corpus of 50 lakh rupees in 2 or 3 years, which is a tall order, Menon, really, if you ask me. That's too short a time horizon. Now, he wants to know, Dhirendra, how much he should invest in his mutual funds to achieve that target, and he wants us to help him tweak his portfolio. Now, the first on his list is the HDFC Top 200 fund. This is a stellar large cap fund, but does it fit his needs?
No, somebody who has appetite, it is a moderate risk fund, and but I would not say that, it is a risk-free fund. It assumes risk and is able to participate reasonably. I would say it's a good mix of, a good mix of, large and mid cap.
The next on his list is the Franklin India Blue Chip Fund. Another large cap fund doesn't really have the risk appetite that he's looking for, does it?
No, this fund is reasonably risk averse in the sense that it is fully invested in large cap. And from that standpoint, over a period of time, but given his time frame, given his 2 to 3 year time frame in which he needs to liquidate his investment, 2 to 3 years time frame is not good enough to really seek return, because there is a possibility that if you plan to exit on X date 3 years away, then the market could be hostile. What we say that invest gradually, it is as important that as you get closer to your goal, disinvest gradually.
Alright, the HDFC Mid Cap is the next on his list. Now, this is a mid and small cap fund. It's an aggressive fund. Is it one of the funds he should hold on to in his portfolio?
This is an outstanding fund. It is proving to be the best performing mid cap fund of late. And I think, if the market is in for a turnaround, this fund is going to surprise us.
The ICICI Prudential Dynamic, that's the next on his list. Continue investing in this one as well?
Yes, this fund is actually, works on both sides. It is able to participate in the market rally, rise, as well as, able to trying to protect the value in a declining phase. So, yes, a fund worth holding. Reliance
Growth, Dhirendra, this is another one that keeps coming up when we talk about it. Should he continue to invest in this fund? Does it suit his needs?
Yes, this is a fund where I'm hopeful that as and when the market turns around, it should do well. But it has been a greatly disappointing fund over the past 4 or 5 years. Most investors who saw the past performance came into the fund has been disappointing. But given, that if the market, if the turnaround what we have witnessed so far, if it continues for a brief period, I think this fund will compensate for its long underperformance.
Alright, the Sundaram Select Mid Cap is the next on his list. Now, this used to be a top performer in the mid cap space. It's not a top performer any longer. Would you recommend that he continue investing in this one?
Again, most mid caps have been disappointing if one looks at past 1.5 years. But I think looking at the characters of the fund, how they have done over a period of time, how they participate in the rising market, I think it's a fund worth holding.
Alright, the last on his list is the AIG World Gold Fund, Dhirendra. Now, taking a speculative stand on gold there, would you recommend he continue with that investment as well?
He should continue investing in this fund, but he should continue investing into this fund with an eye on the value. If he should put some kind of stop loss as and when it happens. If he's just looking at the highs and he sees a certain percentage of decline, he should have his rules written down somewhere and he should execute it.
Menon's last question was, if he's going to achieve this target of 50 lakh rupees in the next 3 years, how much should he be putting away every month into the funds that you've selected for him? What would be your recommendation of what kind of return he can expect?
50 lakh rupee, 2 to 3 years time frame, I think it's a very unreasonable expectation. Very difficult to guess market on this kind of time frame. On a 5 to 10 year basis, I would say that it's reasonable to expect 1.5 times of my fixed income return. And that is, on most occasions on these time frames, that return has materialized.
Alright, Menon, now this goes back to what we were talking about earlier in the show. If you have a horizon that's 5 years or more, then it makes sense to go to the equity market. Otherwise, you're taking a huge risk if your horizon is only 3 years, and you said 2 to 3 years, which is even less. Now, Dhirendra has picked the funds that are aggressive, that fit into what you want from your portfolio. So good luck. But our recommendation would be to try and hold those funds for longer, at least for 5 years. Now, moving on, Dhirendra, to a question from someone with a completely different risk appetite. Vishal is 30 years old and he has a really low risk appetite. He wants to put 2,000 or 3,000 rupees a month in mutual funds for a period of 15 to 20 years. Now, he wants to know which mutual funds he should choose to put his money into. What would you recommend? Should he be looking at a balanced fund because of his risk appetite? Because he does have a really long-term horizon.
Yeah, he should look at a balanced fund. And there are 2-3 things which he should do alongside. One is, even among the balanced fund, he should choose not the most performing balanced fund like HDFC Prudence or Reliance Balanced, but choose something like UTI Balanced or DST BlackRock Balanced, where the equity component is large cap, anchored. That's one. The other is, should invest continually and not look at values on a month-on-month basis.